Hello, today's Thursday, April 3rd, 2025, and what a day it was. Obviously, there were people hoping that the tariff news was going to come out at least better than expected, and for about a minute there, yesterday afternoon, it looked like it did, and then it didn't. And the conclusion was that it was actually worse than expected. And I think even worse than that fact was the way that they did it, and people uncovered very quickly the math that they came up with was so dishonest that it just doesn't give any sort of confidence to these people that are in charge right now. And that lack of confidence clearly is not positive for the financial markets in the United States of America. Not to mention the whole fundamental thing about, the tariffs and all that, but the confidence, which is a lot, is just dropping on a daily basis. And that ain't good. And that's why the markets are kind of, I think, doing what they are doing. I continue to talk quite a bit about the fact that the scariest thing to me is that while we see sentiment numbers like AAII and all that very low, we don't see the selling, the actual positioning numbers coming down like that. So it's like they're bearish, but they haven't sold. And in fact, we have seen retail has been net buyers this whole way down. I talked about during the entire bull market for the last 2 years that was going to be the first thing that we were going to have to see for this market to ever really go down, was people to actually buy the dip. They clearly weren't going to. The bears were clearly never going to give up and chase the rally. They had to wait for a dip. And that's kind of what we're seeing. I mean, look, my man Dan Nathan, who I've been following for a long time, has been bearish for a long time. In his disclosures, he has the most long exposure I have ever seen him have. There's a guy who's been bearish since forever, since going back to at least 2008, if not longer. And he's buying. And I think it's dangerous. I read an article today from an analyst that covers Apple. And he went into all the reasons why, this tariff thing was so horrible for Apple. And, they do so much of their manufacturing in China and Vietnam, and the cost, and how they're going to have to raise the iPhones to, and what the cost would be if they actually changed, their whole supply chain, which was a huge number. And if they actually brought their manufacturing back to the U.S., that iPhones would be like $3,500 and nobody would buy them. And he went through that whole argument. And then in the end, he said, I keep my buy rating on Apple. So that speaks to what I'm saying. Like, it's one thing for people to say they're bearish, but it's another thing for them to get the hell out. And to this point, it just doesn't seem like they are. And even today was an example where, you come in, even if you're bearish, the S&Ps are down 200 in the morning. Are you going to start selling then? Very hard to do, right? And yet, if you did do that, you made about 80 points, from the open to the close. 80 points is a pretty big move in the S&Ps. And that's what you made if you had sold it down at the open, down 200. But very hard to do that. And so now people, I feel like, are in like this frozen thing. Maybe they want to sell now, but they want to wait for the bounce now. And that becomes, very, very kind of dangerous, potentially very dangerous. It's the exact opposite of what we were seeing and that I spoke about in many of my videos going back the last 2 years, where everyone was trying to buy, sell the top, sell the top, sell the top, sell the top. And it kept going up, 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 up. And now they're looking to buy the dip, buy the dip, buy the dip. And now it's just going down, 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 down. There is potential for some danger, based on all of that kind of positioning ideas. So, that's kind of what I think. The other things, obviously, everything got killed, right? The energies got killed. You're looking at things down 5-6% today, right? Across the board, right? Crude oil down almost 7%. Gasoline 7.5%. Like, these are not small moves, And gold, look, even gold went down today. All right. But I have been talking a lot for the people that watch these daily videos about how if you want to be short the metals, I thought certainly based on positioning and based on market action that silver was the place to be short. Well, gold had a decent down day today, right? Down, let's call it 1.2%. But you know what? Silver was down 8%. Would you rather be short something down 1.2% or something that's down 8%? It's a silly question, but the positioning and the market action recently have shown that. And you can see the market action here was this reversal day on silver, on a day that theoretically was bullish to metals, right? This was gold on that day, right? Gold was breaking out the highs. Silver was failing. So a combination of the fact that they're much longer silver than they are gold, and the fact that the market was failing, is what I look at for that type of stuff. You know, I don't know very much about fundamentals of silver or gold. You know, I just know that the market action was starting to show bad, and the crowdedness was getting very close to very crowded. So if I'm going to choose one, if I want to be short, I'd rather be short the one that's more crowded and that has worse market action, and that's exactly what silver had, and that's why silver, I think, was down 7 times more than gold was today. And these things were all down, you know. Platinum, palladium, copper. This reversal thing on copper was beautiful back here. That was on a bullish day too. That was the day that they announced that there were going to be copper tariffs. Okay. We've gone straight down since then. And bonds, of course, went up. I thought if there was anything interesting towards the end of the day here, it was that bonds were going up as stocks were coming off, and then they stopped, and they didn't go up anymore. Now, I'm going to say it again. If this is going to continue, then bonds better go up. Because if they can't go up during this, we're going to be in a lot of trouble. You know, if the world is not going to be willing to buy our bonds, and the world is not going to finance the U.S. debt and all that, then we're in a lot of trouble. And I've talked about that a lot. I've done videos on that, but bonds were up today. But they stopped going up even as stocks kept coming down. I think that was a little dodgy. The yen obviously went up a lot today as well, but again, stopped going up even as stocks started to come down again. Stocks closed on the lows. Yen closed way off its low. Bonds closed way off their highs. I'm sorry. Yen closed way off its highs. Quite a bit off its highs. Bonds closed quite a bit off their highs. Don't know if that means anything. It's not like if they closed down, I would have been a hell of a lot more nervous, but just something to keep an eye on. Why didn't they keep going even as stocks kept going? I don't know. And another one that did that, by the way, was Bitcoin, right? Bitcoin was doing its thing that it does, being the risk-off asset, or the risk-on asset that it is, and it was going down. But you know what? It stopped going down. It actually stopped going down around 11 o'clock this morning, you know. Did it bounce and rip? No. But it did stop going down. So you had Bitcoin, you had the yen, and you had bonds that stopped doing that, even though stocks continued to go down. Just something I think to keep an eye on that could be interesting at the very least, right? So anyway, I think that's where we're at. You know, it's still, in my view, is a place to be very careful here. You know, a lot of people want to try and pick bottoms, and I'm going to warn you again, just like I was warning you for 2 years when the stock market kept going up. Stop trying to catch the high tick. Stop trying to catch the low tick. Okay? If the market's going to bottom, there's going to be plenty of time to buy it. You don't have to catch the low tick. You will lose more money trying to catch the low tick than you'll end up making by when the market goes back up, right? Seen it a million times. It happens all the time. It's a habit that is very bad and that you have to try to avoid very much, right? You don't have to get the low tick, all right? And it will kill you trying. So anyway, those are my thoughts today. I hope that helps. Please like the video. If you like it, please check us out, crowdedmarketreport.com, on Twitter, YouTube, which I guess this is, so you're already on that, Substack, and all that. All right. Always happy to hear comments and questions. And tomorrow's COT report, it's not going to pick up a lot of this action because it's as of Tuesday's close, but we will hopefully be able to interpolate it and see what we can come up with. But will be interesting nevertheless. Okay. So we'll talk to a lot of you on the COT call tomorrow. And for everyone else, have a pleasant weekend. All right. Thanks. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.